What credit score do you need to get a hard money loan? Well, hard money by definition is lending on the hard asset rather than the soft assets, meaning the hard asset is the house itself, where the soft assets is your job, your income, your debt to income ratio, and those things. Hard money lenders, true hard money lenders, are not really looking at those things. They're really looking at the value of the property. However, as a hard money lender, as I'm looking at the asset, I want to make sure I'm not putting the asset in jeopardy. And the way that that can be put in jeopardy is a few things. Number one, you can't have any active bankruptcies. If you're in an active bankruptcy and we did a loan on that, it could put the property in jeopardy where I don't have the security that I may be hoping that I have because of the active bankruptcy. Second thing you can't have is you can't have an active foreclosure. If you're currently being foreclosed on, it doesn't make a lot of sense as a hard money lender to give you another loan that I may have to foreclose on. So that's the other thing you've got to be looking at here. You can't have any judgments. A judgment saying, a judge has ruled that you actually owe this money. The judgment can attach to the property. Yes, there's some creative ways to try and work around that, but for the most part, you owe somebody else that money. That can cause some problems for my asset. I don't want to be involved with that. Collections. If you have collections where somebody's trying to get money that you actually owe them, that can have problems with my security or my asset or the property. So those are going to need to be taken care of. You can't have any tax liens. This is like you didn't pay the state or you didn't pay the IRS and they're coming after you. Those can have some issues with my collateral, with the asset or the property. Also, you can't have any charge-offs. This basically means they tried to collect, they couldn't collect. If it's more than $2,000, you can't have those unless you can pay those. If you can pay those, then you can do that. So as long as you don't have any of those things, we can work to get a deal funded. However, if you do have some of those things, there's a couple of options you do have, which is wholesaling the property, which is getting a property under contract and selling that contract for a profit. You don't have to deal with the rehab or anything else. The other way you can do that is by doing land flipping, because the way that we fund land deals is a unique strategy where you are able to do those types of deals with regardless of the situation we've talked about. But when it comes to the hard money, you can't have any of these things in order for you to get that hard money loan.